Is Hex a Ponzi scheme using that definition? Well, obviously the answer is no, but why? Let's try to understand the asset that we're either about to invest in or that we're already investing in. And so if you're on the fence about Hex and you might have heard something, let's really discuss why Hex is not a Ponzi scheme. So Hex pays out an interest rate of about 40% for average length stakes, and an average length stake in the Hex system is about 5.8 years at the time of this video. So if you stake for less long than that, you'll get a little bit lower interest rate. If you stake longer than 5.8 years, you'll get a little bit higher interest rate. And the question everybody always asks is, well, where does that money come from? How can a coin just pay you that interest? It seems, abnormally high or too good to be true or something like that. Really, it's very simple, guys. Inflation is hard-coded into the immutable smart contract. That's a key word. Immutable smart contract at a constant rate of 3.69% a year. And I want to make this abundantly clear, guys. The interest that you're getting in Hex is just paid in more Hex tokens. So when we talk about the interest rate, you're just getting more Hex for locking it up longer because you're speculating that the USD price will be higher in the future. So there's no US dollars being paid out. Okay, when you stake, the inflation, the rewards you get, the interest rate is just more of the same coin. Okay, seems obvious, I know, but some people still get that mixed up. So just wanted to clarify. So you're not trusting a human being to divvy out your gains or your interest rate over time. You're simply trusting a mathematical programmed piece of code called a smart contract. Okay, all a smart contract is a piece of code, and it's immutable, meaning there's no admin keys, no backdoors, and nobody can change the code once it exists on the blockchain like it has been existing for the past 666 days. So inflation is hard-coded, meaning that constant rate of 3.69% a year is the inflation rate. So the total supply of the Hex coins, all the Hex coins in existence, inflates at a rate of 3.69%, and that inflation is divvied up proportionally to the stakers in the system. Stakers are just the people that have chosen voluntarily to lock their Hex up for a later date. And by staking, you get an interest rate proportional to how long you've staked, how much you've staked, and some other nuances as well. Now, the price of Hex is really just determined by new investors buying coins on the open peer-to-peer market. We primarily use Uniswap and Hex, which truly is a peer-to-peer market. There's no middleman. It's primarily traded on automated market makers such as this. But the price is determined just like any other cryptocurrency or stock. So I buy Hex from somebody that's willing to sell it to me, and thus the price goes up because I'm buying at the price that he is setting. Or on the other side, if I sell a coin, very simply, the price goes down because I want to get rid of my coin and I want to get rid of it to a buyer that's buying the coin at a lower price than the previous buyer bought the coin for. Prices in anything go up and down simply based on what people are willing to pay for them. Buying makes prices go up, selling makes prices go down. It's really, really very simple. And if you want to call Hex a Ponzi scheme because it requires new people to make the price go up, well, then you have to call everything a Ponzi scheme. Bitcoin, stocks, whatever. So if you're going to use such a loose definition and to the point where everything is a Ponzi scheme to you, maybe investing is just not for you.